And I guess Clayton here the other day, and this other lady in class, she's always prompt on telling that she's going to live stream or she's going to, she sends in homework, what have you. But Matthew, you're out there somewhere. I don't hear from you much. I don't get summaries and problems and so on. But now this other lady, she sends in homework before you all give it to me. On that problem, she's already sent that problem in. So y'all were supposed to do a big problem today. And what problem was that? 51? I'm going to see if that is on my solutions. I think there's a resource manual I might could order. I tried that last year, it didn't have it in it. What chapter was that problem in?
Chapter 7.
In chapter 7 on itemized deductions. Okay, we're going to try to have a test on Tuesday in class, 3 chapters. Of course, you can have all the problems you worked in the notes in your book. And you start the test at 12:30, and you could have to 3 o'clock if you could take that time. I know you guys could stay to 3, because you got to stay to 6 anyway. And Clayton, I think he can stay to 3, and I don't know about these others. Hopefully, everybody can stay to 3 o'clock. That gives you 2.5 hours open book, and you'll find answers easy. So, itemized deductions, I think you can find those answers easy, and you can answer some of them without trying to look them up. I think in chapter 6, we went over things quite a bit, reviewed them, and then in chapter 5, we need to go back and review that if we can. All right, now this was problem number what? I'll bet you mine won't go there. What's got tax strategy, 58? Oh, I was worried about that. See, instructor's resource manual. That's the one they didn't have ready a while back. So we won't be able to look at it, but we can go over it. You have yours with you, Cole? Jonathan?
I wasn't sure how to do it.
Huh?
They asked for like a schedule what needs to be, and I just didn't know.
You haven't ran them off yet? Huh?
I haven't printed them off yet.
Have you, Jonathan?
I've looked at it online, but I didn't have a printer at home to print them off.
Okay, you'll need to do that, then we won't, now, Cole, here's what we're going to do. We're going to show you a schedule A. If I got it typed in there close, maybe it'll bring it up. So I found that about as quick as going to irs.gov. But now, when you start doing this problem code, just take this schedule, and you too, Jonathan, and start filling in everything that you can. Fill in the medical, and then you got to enter the amount from 1040 and take out 7.5% of it. All right? And fill in the state taxes, the real estate taxes, and fill in the mortgage interest with no points, and fill in the contributions. You pretty much got it. Add it up. And that will be your itemized deductions. Now, it tells you right down here where to take it to. Okay? Just read the form. All right? That would be the 2% item, which I don't think you had. There's some other which you don't have. Okay. Is 1040 line 38 over 156,000? It's not, but if it was, you'd have to reduce itemized deduction. No, your deduction is not limited. So you put it here, line 40, form 1040, and you subtract that from your adjusted gross income and find your tax. That's pretty much what you'll be doing in that problem. Okay. All right. So chapter 7, I think we covered fair. Now chapter 6, I believe we got over to page 41. Let's go down to number 37.
What's the form 8283?
Where's that at?
We know the problem.
All right, let's see if we can find it, Jonathan. I don't think it's much. It's if you had a lot of dividends and things. Let me see though. Form 8283. All right. Did you give any non-cash contributions? In that problem, you just gave.
Just the cash contribution to church.
Then you won't need this form. Now, this is if you give a lot of clothing to a food pantry, Salvation Army, if you give a piece of land to a church or an old car, what have you. So information on donated property. And if the amount you claimed is 500 or less, you do not have to complete any of this other stuff. But it goes down and you have to take the fair market value of the cost, whichever is lower. Okay. And you attach that, and that just proves your other itemized deductions. Well, I didn't think this problem had that, but the problem mentioned this form, which you don't need. You just need a 1040 and a Schedule A. Schedule what? B? Oh, that's just to put any interest or dividends on. So just list them before you bring it over to the front of the form. Okay, give it another try between now and Tuesday. You can do it. Now we're on page 41, number 37. Take a minute and read that while I find these solutions and see if these are deductible. Legal and accounting fees. Okay, what do you think about that first one, guys? 200 in attorney fees for title search on new property. Think that's deductible? It's not. It would be added on to the base of your house if you bought it or property. 450 in legal fees in an action brought to collect back rents. All right, you're in business of rental property. You got to get an attorney to try to collect some of those rents. You think that'd be deductible? Think about it. What do you think, Jonathan? What? It is, yeah. $300 to a CPA for the preparation of federal income tax. $400 is preparation of Schedule C. Can you deduct fees for preparing your taxes? A business can and an individual can. You can deduct yours on that 2% deal on the 1040A. All right, $300 in attorney's fees for drafting a will. That's plumb personal, isn't it? Can't deduct it anywhere. $250 in an unsuccessful attempt to prevent the city from rezoning the area of the city where several of your office buildings are. Now, you think that's a good expense? You're in business, you got office building. Now, I think that would be deductible. So look at these. A, not deductible as we said. Deductible for AGI. And $400 is deductible for AGI. The other $100 is deductible on Schedule A. D, personal expense, a will, not deductible. And E, deductible. It's ordinary and necessary. So I think we know what's ordinary and necessary in the line of accounting and attorney fees. All right, let's look at illegal payments. Number 38, you're supposed to be looking at the even ones. This corporation is engaged in the business of purchasing and importing carpets from Iran. Importing these carpets from Iran is illegal. Wonder why. Trump has a trade ban on Iran. So if you import those carpets, it's illegal. Okay. But now, if you reported this legal income, here's a list of income and expenses. Sales you should report. Now, can you take all of these expenses, look down through them and see which one just give me one you cannot take?
Bribes.
The bribes. That's right. There's one you cannot take. And that's the answer you should get. Okay? So it's illegal business, but you're supposed to report the income. The expenses are legal, except for the one illegal expense, bribes. Now, I'm sure a lot of this stuff happens. There's a lot of illegal businesses. There's probably illegal business on the internet. Moonshine, prostitution will always be two illegal activities. If you do black market drugs or anything, it's illegal activity. A lot of new ones, I think sex trafficking is a big business now. Illegal activities. Okay, now B part. Assume the same fact as part A, except that your business consists of buying and selling illegal drugs. What is their taxable income if it's illegal drugs? Now, folks, we mentioned something about this the other day. All right, your taxable income is $480,000. Here, it was $355,000. What's the difference? Under Section 280, expenses incurred in illegal trafficking of a controlled substance are not deductible. Cost of goods sold is not a deduction, but is used to compute gross income. All right. B part. It says taxable income is $480,000, which is gross income minus cost of goods sold, really. So you get to take some of my solutions, this thing will write on, and some it won't. It does accounting good. But anyway, the $480,000, you don't get to take any of these expenses because it's illegal drugs. Now, how are you going to get them to do a return anyway? You're not. But if they're caught and taken to court, avoiding or a tax evasion, this is what they'd pay taxes on, 480. Then they'll get sentenced for the illegal crime. All right. Let's go down to number 40 and look at some of these business investigating. During January and February of the current year, Big Bang incurs $13,000 in travel, studies, legal expenses to investigate, excuse me, the feasibility of opening a new entertainment gallery in one of the new suburban malls in town. Big Bang already owns 2 other entertainment galleries in other malls. What is the proper tax treatment of these expenses if they decide not to open a new gallery? And what is the property tax consequences if they do open a gallery? So the question is, you do open or you don't open, what are you going to do with $13,000 expenses? So let's look at A and B here. I'll just show you the answers. The expenses are currently deductible as trade or business because Big Bang is already in business operating. All right. Now here, A part was that they are going to open or not open. Not open. They get deducted expenses. They got 2 other facilities. The expenses are currently deductible as trade or business expense because Big Bang is already operating other business. Got the same answer. So, but what if Big Bang did not have other entertainment facilities? Now, I know you could deduct it if you open, but if you don't open, what have you got to take it against? That might be a question. I'd have to think about that one. All right, let's look at 42, timing of expense. All right, Solutions Corporation, a company vendor. You know, it seems like every book now by principals and some of their questions, examples, it's solutions. Solutions. Used to be X, Y, or Z. Now it's solutions. Just now thought about that. All right, they're a computer vendor and consulting business company. Using accrual method of accounting. Its tax year is the calendar year. The following are 3 of the corporation's transactions during the current year. Okay, corporation, proprietorship, or whatever. Now, A part. How should Solutions Corporation treat these transactions? Or how would your answer change if they were a cash basis taxpayer? Okay, A, your accrual basis, B, your cash basis. All right, Jonathan, read number 1, see what you think. Cole, read number 2, see what you think. Take a minute. All right, that's number 42. Jonathan, what do you think about A part? on accrual basis? How about cash basis? Well, they've got rules even for cash basis in these things, so they can deduct, you said the 4,000, right? In the current year, the all events test, we don't worry about that. What'd you have, Cole, for number 2?
Deduct the 11,500.
All right, they may deduct 11,500 on a current year tax return. All right. Now, number 3, I haven't even read it yet, but it looks like they had some rent, seminars, printer. Looks like they had $37.50, and there's expenses paid the current year, expenses paid next year. Now they can deduct $37.50 in the current year. However, the expenses do not meet the general economic performance, so even on an accrual basis, you can't deduct $7,500. But now, if we go down the B part and look at B part, cash basis, it could not deduct any amount of liability in the current year. It cannot deduct a remodeling expense in the period in which it can deduct when you pay the bill. Now, if they're cash basis, it could deduct 11.5, the same thing that Cole said for accrual. Now down here, if it were cash basis, it could only take the cash. So cash or accrual, cash or accrual. Now up here on cash basis, nothing. Accrual, 4,000. Okay, y'all handle that one okay. Now we're going to look at prepaid expenses, which may be a little different. So let's look at number 43 together. On November the current year, it entered into a lease to rent some office space. All right. The lease agreement states that the lease payments are $12,000 per year. All right. Payable in November. That leave 2 months. Under the terms of the lease, they're required to pay a $5,000 deposit, refundable. Now, on that one, on the accrual basis, how much is that lease a year? 12,000. All right. So that's 1,000 a month, right? And you've only got November, December left. It's 2 months. So that's 212 or 2,000. B part I haven't read. Okay, Pinelio renewed its malpractice insurance, paying $18,000 for the 3-year contract. Now she prepaid $18,000. So the most she can get is $6,000 a year. Okay. She's prepaying it when? 1st of December? 1 month. So it is 1/36 of 18,000 or 1/12 of 6,000. 6,000 a year, 1 month, 1/12. So somebody may understand it better if it's 6,000 a year times 1/12, but the answer is 500. Prepaid items, accrual or cash basis, these will probably be the same answer. See, on December the current year, she mailed out a check for $5,000 for drafting service performed for it during the current year by an individual who lives in another city. On December 31st, $5,000. Let's see. How come she going to take all that? Oh, she mailed out a check. The only question here is, mailing out a check on the last day of the accounting period, does that count as payment? Yes. If it had been a credit card, it would have been yes also. D part, on December, the firm received a shipment of $700 worth of stationery and other supplies. She had an open charge account with the office supply company, which bills the firm monthly for charges made during the year. That should be legit expense, and the answer should be 700. It's not currently deductible. Pamela used the cash method. It's not deductible. She used the cash method because she hadn't paid for it. I didn't see that cash basis. Yeah, it's in the first sentence up there, which I skipped. Very first line, cash basis. On December, Pinella picked up some work that a legal printing company had done, which amounted to $1,000. The firm charged the $1,000 with its corporation credit card. So the $1,000 is okay. I just mentioned credit card. So on a cash basis, you still may have to prorate certain things, okay, like A and B. Even on a cash basis, you prorate. Okay, let's look at prepaid interest. Both of you just read that and come up with a common answer, guys. 44. Okay, guys, basically, this is home mortgage interest. It's really an itemized deduction. How about the 12,000? Can they deduct the 12,000? Yes. Now, how about the points? 1.5% of what? 300, no, let's see. 280,000, multiply that by 1.5. All right. Knock off a zero. You had too many zeros. It's 4,200, not 420,000. You didn't put a decimal in there. 1.5% is decimal 000. No, it's decimal 015. You'll get 4,200, right? Okay, so here's the deal. Total deductions is 12,000 mortgage and 4,200 in points. Usually those points are upfront interest. You know, you can pay a bank 5 points and get a mortgage for 1%. But try to pay as less points you can up front. That adds on to your overall interest. But you do get to deduct points in most cases, general. So we're going to stick with you can deduct it. Now, the other closing costs, like appraisal fees and title search, you add that onto the basis of the home. Well, we're going back to chapter 5, basis. You add that onto the basis of the home. Okay, now we got to do a wash sale. So number 46, doing it together. Help me keep up with some days. All right. We bought 1,000 shares of Western common stock, which is purchased on August the 8th for 12,000. On November the 3rd, 2018, that makes it long term. Cougar purchased an additional 300 shares for 3,000. Now, how many days are left in October there? October 3rd, 2018. How many days are left? 27, 28. All right. But on October the 12th, just how many days later? 9 days later, he sells the original 1,000 shares for 8,500. Now, he paid 12,000 for those, right? And if you sell them for 8,500, you're taking a what? Okay, to make this real short, he can take the loss on 700 shares, but he should not be able to take the loss on the other 300 because he bought 3 back identical just 9 days before. That's what a wash sale does. I don't know how they got that loss. Let's see what happened here. On March, he purchased 1,000, then purchased 300, then he sold all 1,000. On November the 1st, he purchased 5 more hundred. I didn't read on. Well, that's 800. All that's within a 60-day period, before and after. Now, he realized a total loss. Realize does not mean recognize. However, he can only recognize $700. All right. 3 plus 5 is how much? 3 plus 5 is what? 8. 8 over 1,000 is 8 over 10 or 800 over 1,000, 80%. The other 200 that he didn't buy back is 20%. So he can take 20% of that $3,500 loss for the 200 shares he didn't buy back. Okay, it will explain to you all about that 60-day rule. Now, this loss you cannot take, all right, what's 80% of 3,500? What's 80% of 3,500? I don't know, is it?
Well, 20% is 700.
Yeah, that's right. Okay, so you can take the purchase price plus 3/8 of that 2,800 disallowed loss and add it to your basis. So it's purchase price plus 1,750. That's 5/8. You got 3/8 and 5/8 because you got different dates. 3/8, 5/8, and there was 2/8. All right. With sales, all I want you to do is be careful. Now we're going to look at constructive ownership. For business purposes, guys, look at 47 and tell me the answer to A. Add up whatever percent you think applies. Basically, who is and who is not a relative. Which one there do you think probably would not be a relative? Which one? That's probably what I would think. 47. Troy is deemed to own 30% in Bury because he is treated as owning the stock owned by his family. All right. Which includes his wife and son. Now, Troy is not deemed to own the stock owned by Jimmy or his father because cousins and uncles are not considered to be family under Section 267. Cousins and uncles. I knew the cousin wasn't. Now, that leaves out 45%. We got Tom. We got Tom and we got Troy's son and Troy's wife, and that's it, 30%. Can I take a sister-in-law? So that's 30%. So here's the write-up on it. 20 and 10, he's considered owning 30% because his wife and son. I know you can count father and mother, but I guess you can't take an uncle. Here's another way to look at it. Now you can take the whole 5,000 loss. Yeah.
Why does it have TJ?
Was it what now?
It's TJ. I don't remember seeing TJ.
Now Jimmy and Troy. Now Troy is the man, right? Now, who's Jimmy?
Jimmy's Troy's cousin.
Now Jimmy and Troy together here in this case, I guess that's Troy and Jimmy together own 20%.
Troy and Jimmy are equal partners in a separate entity, TJ Partnership.
Okay, that's a separate entity. So TJ Partners, but that does not go down here. It does not go down here to Bury Corporation. So you can actually strike that out, Jonathan. But TJ is Troy and Jimmy. And even though they're another partnership, that partnership's not buying anything into it. So that's Jimmy 50% and Troy 50% of TJ. They should not have even listed TJ on there. Okay. Okay, we've got to get to a hobby loss. Now, if you would, between now and Tuesday, you got a test Tuesday. You got that problem due Tuesday. And if you get time, look at 48 and 50 before Tuesday. So now we've got to do hobbies. We're going to try to do one on a hobby and one on a vacation home to wrap up some concepts in this chapter. So let's look at a hobby number 52. Emmy is an interior decorator who does consulting work. Additionally, she has been designing and creating rubber stamps for the past several years. She sells stamps to a local stationery specialty shop or novelty shop. She has reported the following net income or loss. Now, how many years did she have a loss? 18, 17, 15, 14. She's had a loss how many years out of 5? Out of the last 5, she had a loss how many years? 4. See, I would go to court and argue with Emmy if she was really trying to make a profit. She is audited for the year 2018, and the agent disallowed that loss. Can Emily make an election for 2018 to keep the year open in anticipation of meeting the presumptive rule for the year? Why or why not? Well, I'd argue with him in the first place. Let's see. Number 52. She can't make an election to keep a year open because it's already at the end of the year and she's already had a loss 4 out of 5. Now, for possible audit with respect, let's see. The election allows this year in question to remain open with respect to the activity under sufficient years after they have passed. The election must be made within 3 years after the due date for the first year. Had she made that election, they could have left it open. She does not meet a profit test, okay? Okay, guys, take a minute, read number 53, and tell me what you think about it. It's another hobby loss. What's the total amount of income and deductions? Now, first off, sale of these little rabbits, prizes and awards on those little rabbits, property taxes on those rabbits, property taxes on their little buildings, fees, vet fees, appreciation on their little rabbit houses. All right, y'all come up with an answer. She's definitely got a loss. All right. Now, since it is a hobby, Chuck must report all 1,100 of income as part of gross income. but he cannot deduct any of the expenses related to the hobby activity. The exception is for otherwise deductible expenses. Chuck can deduct $200 in property tax as an itemized deduction. Since it's a hobby, are they going to make him pay on $1,100? See, prizes and awards should have been added to the $800.
Why does it have the parentheses showing it's negative?
Do what?
It has the parentheses. So wouldn't that be negative?
They shouldn't have had it in parentheses.
Okay.
They should have had 800 plus 300. Because that is money he received. Sale of rabbits for breeding stock. I think he should have been able to take the feed and the vet fee, but they're not going to let him take it. But even in B part, identify which expenses may be deducted, and deduction for AGI just at 200. What amount is the cost base of rabbit Hudson to be deductible for the year? Well, none. Those little houses cost how much? We don't know, do we? But depreciation on the rabbit houses was $250. Anyway, don't pay to raise rabbits. That was not a good one, but we need to move on to a vacation home. Now let's look at number 54 together. Kilmer incurs the following expenses on her home: insurance, repair, maintenance, interest, property tax, utility depreciation. During 2018, she used the condo 20 days. She rented it out for a total of 60 days, generating a total gross income of $9,100. Okay. If it was under 14 days that she stayed there, she could have deducted all as business rental expense. Now, if you took 10% of 60 days, she could have stayed less than 6 or less than 14. So you got to prorate this. So what are your fractions? Look at those days and you can tell me your fractions. Pretty easy. Convert those days to fractions, guys. What have you got? Huh? 1/3? 20 over 80. You're thinking the right thing, Cole.
Oh, so I added 20 days for the total.
Okay, now wait a minute. She rented it out for a total of 60 days. So she rented it out for 60. She stayed in 20. That makes 80, right? 80. That looks to me like it's 25.75. So let's see. All right. We know the 20, we know the 14, we know the 10, we know the 6. I just went over that. Now, add up her total expenses. Add up her total expenses. What do you get for her total expenses?
Would you just add up everything?
Well, no, just add them all up first. All right, 5, 7, 3, 1, 8, 8. Is that 12? 14 what? Now multiply that by 75% for business portion. 60 out of 80 days. Multiply that by 75%. What do you get? but your limit to how much? The income of 9,100. So depreciation would be the last one you would take. Okay, but now look at B part. B part, what is the effect on the base of the condo? Okay, the condominium's base is adjusted in 2018 only for the portion of depreciation expense deductible. So look at that depreciation expense. They'll let you take up to your income. Now, your other CCO 60 plus 20. Now, in that other mortgage interest, you can take it as an itemized deduction or property taxes, itemized deduction. Repairs and insurance and utilities, all these are non-deductible person. But for rental use, 75%, 75%, 75%, 75%, 75%, 75% up until it makes 9,100. So you only get it up 4,600 depreciation. That's all you need, and that would reduce its basis. 3,400 is not deductible anywhere. All right, they didn't have enough problems on rental property. They didn't have enough problems on hobbies. Okay, there's other problems I'd like to have done, but I think we've done okay. Now, what problem, did I give you a problem in this chapter to do?
57.
51?
57.
Okay, that 57. Well, I'll take that up whenever you got it, okay? Don't put that first. Put this one problem in chapter 7 first. Study for the test second, okay? Now, guys, what I'm going to let you do is go a few minutes early today for one reason. Go up to the lab and run off some 1040s and ABs. Johnson's printer don't work at home, and Cole's printer is connected to his Xbox. He's printing off scores. But anyway, go up and run off. We'll just call it a day. Give you all time to get some forms. And if you got time that you're staying around here, not going home, be working on that problem.